BRRRRs. Today, in this 2-minute take, we're going to cover what they are and important things you need to keep in mind when considering doing one. A BRRRR is an acronym for buy, rehab, rent out, refinance, and repeat. It's a real estate investment strategy that's been very popular amongst investors. It can create huge amounts of forced equity in a property and allow the investors to leverage that increased value by pulling it out in the form of a loan and then restarting the whole process. Nowadays, it's much more challenging than it used to be, and profit margins are much slimmer, and that's due to higher interest rates and higher costs for purchasing a home. Okay, so what are the key points to understanding a BRRRR? Well, the idea here is that we're going to buy a property that needs rehab. It needs lots of work, so we should be getting it at a steep discount. The purchase is typically done with either cash money or a short-term hard money loan. After the rehab is complete, you move a tenant into the property and you take out a mortgage on the property. Most lenders will give you 70 to 80% loan to value, or LTV. So if the rehabbed house is worth, say, $200,000, you could get as much as $160,000 back. You then use that money to pay off the original hard money loan or to put the cash back into your pocket so you can repeat the process. In years past, investors were able to pull almost all of their money back out of the deal through the mortgaging process, aka the refinancing step of the BRRRR. Today, the deals are much tighter, the profit margins are much slimmer, so investors are getting most of their money back out, but not all of it. When doing a BRRRR, it's absolutely vital to run the numbers well. Investors need to understand the rehab costs and how much the property will rent for after the rehab is done. Since the investor will be taking out a mortgage on the property, it's crucial to make sure the new mortgage will be covered by the rent that the property will provide. BRRRRing is challenging these days, but it's still an incredible opportunity to create equity, to get a freshly rehabbed property, and to grow your rental portfolio. This has been a Real Simple Rentals 2-minute take.